Hi, I'm Peter Samuelson with Sawston Wealth Management, and we are back. This will be the final part of my series. Our journey is about to come to a close on risk. First, we talked about compound interest. Then we talked about unsystematic risk. Now we're going to take a deeper dive into systematic risk and talk about some of these risks that are in our everyday economy that you may not know about. There's 3 different examples I'm going to give you, so let's start. The first risk is the risk of inflation. Inflation risk is one that has always been around. It's the risk that a dollar you have in your hand today will be worth less in a year than it is now, or when you need to use the money. The dollar is affected the most by inflation risk when it is sitting in a bank account earning less than the rate of inflation. When your money is in a bank account, it's hardly gaining any interest. Investing your money in stocks and bonds is a way to combat inflation risk because your money has the opportunity to grow and gain a higher interest rate. But investing in these instruments is not wise if you need your money in a short period of time, say less than 5 years. The next type of risk I'll go over is interest rate risk. Interest rate risk is the potential for an investment loss that occurs from a change in interest rates. So interest rate risk is in all markets, but the example I'm going to use is going to be around bonds. Bonds with higher interest rates will look more attractive than bonds previously purchased at a lower interest rate. If someone buys a bond and wants to sell it before it matures, they run the risk of getting less than what it would have been if they would have let it mature due to higher interest rates in the current bond market. The last risk I'll go over is exchange rate risk. This risk usually only comes into play with foreign investments. So let's say you have European investments using European money and the value of the American dollar rises. Well, when you sell your European investments and try to convert it back to American dollars, you're going to have fewer American dollars proportionally. Herein lies the exchange rate risk. And that's all I have for today. But please remember that it's important to diversify your investments in order to lessen the impact of all these types of risk. It's also important, if you're going to make investments, to do your own research and make sure to look at all things from all different sides to get the best chance for success.